Hello guys, welcome to another backtesting video. Today I'll be backtesting the data of 4th December of 4th, Monday 2023, as I have been backtesting the data of 2023 from July. Now I have reached December, and as you cannot see, what the frick. Okay, so here you can see on Monday there was no news, Euro news, but we don't trade Euro, so we don't care. And on Monday there was literally no news, as you can see. The fuck. Okay, so as you can see right around here, on Monday there was no news. Yeah, so the brightness is very high. Let me fix it. Now it's fixed. Now can you see? Yep, you can see it. My brightness was very high. So okay, so coming on the charts, on Friday the market closed as bullish. My weekly bias for GU was bullish, and for DXY was bullish too. So the weekly bias was not clear, and when the weekly bias is not clear, we trade daily bias, as you guys know. When the weekly bias is not clear, we trade the daily bias. And on Monday I was looking for buys, not one of the highest probabilities because of how the price action is looking, but if I was looking for something which that would be buys. And if I compare it with DXY I was looking for sells. If I show you something like this, according to how this candle closed right here, I was looking for sells on GU. The overall higher time frame bias was bullish, but yeah, daily bias, we are trading the daily bias, so I was looking for sells. Whereas now let me go to the 4-hourly time frame. The 4-hourly, the previous week high was here, the previous week low was here, and this was the last low that created this high. As we can see, higher lows, higher highs, and the market came all the way down here, rejected, and then went up. So the price action was also not that clean, and on the 4-hourly it was ranging, and the last demand zone that I could spot personally was this one. So at this point what I do, I go to the 1-hourly to spot demands, supplies, fair value gaps. So the hourly, when I went, what I saw was the price action. Obviously the bias is bullish, so I'm looking for buys, so automatically it is self-explanatory. I will be looking for demand zones on the hourly. As you can see, this was a low that caused this high, higher low, higher high, and a bunch of consolidation, accumulation, smart money accumulating orders, boom, to the downside. And then on Friday it made this higher high, changing character to the upside. So this was the demand zone I was looking to trade on GBP USD. So similar sort of things I would be looking for similar sort of things on DXY. Obviously the previous week high and day high were there, the previous week low was here, as you can clearly see, and this was the supply zone which I could spot on the H1, which I have marked something like this. And obviously let me show you now. This was the supply zone. Obviously the market was bullish, the market changed character. That supply zone had a change of character right there, right around here, but I have not marked it because I can see it as I'm now experienced in the market. I have 7 months of experience, so that helps me a lot. I've put in the time, so if you guys put in the time, you guys can also do it. So now this is what I don't like. Okay, so we are back. So now on the after the Asian range is closed, as you guys know, I like to adapt to the conditions in the market, right? After the Asian range is closed, what I did, I went to the M30, look for potential demand zones. There was no potential demand zones. Went to the M15, also there was no potential demand zones. You can argue there was one here which was made on 22, which is 10-15 yesterday, but it was very far, it was already swept liquidity, and there was also no previous structural liquidity sweep. So what I did was, there was also an inducement before at 11:30. There was inducement 11:30, so I entered the market at 1:30. That is our timing, 8 AM UK time, which is 1:30 PM Indian Standard Time at daylight savings. So I also watched DXY. DXY has filled this fair value gap. This trade was literally based on DXY. This DXY has already filled up the H1 fair value gap to the T, and also it mitigated the H1 demand zone, sorry, H1 supply zone right around here. So also that was the reason. To be honest, that was also not the reason. The H1 supply zone was here, and this trade was purely based on the fair value gap fill and then rejection, and I literally aligned it with DXY. It was also making sense with my bias, so I took it with a 2% risk, obviously if it was my challenge account, and 1% risk if it was my funded account. So what happened? We lose this trade. Losing is a part of the game. Losing is a part of the game. We have to accept it. Beautiful lose, no problem. I have no problem with this loss. And after that, what happened? The price literally went down, induced this position again. Basically, this trade was a winner. As you can see here, induced this position, gave our M15 rejection that we want to see. And if you entered the position here with a stop loss somewhere around here, and a little bit tighter stop loss, you could have got your 1:3 risk to reward, something like this, right? So basically, this was a winning trade, but obviously we got stopped out at our timing. This was our setup. Not played out to the T. Sometimes it will happen. Sometimes your setup will be there and it will not work, bro. So the confluences where the daily bias was bullish, H4 market structure was bullish, H1 change of character to bullish, and the demand zone, Asian low liquidity sweep, H1 fair value gap mitigation, and also filled up most 50% of the H1 fair value gap, and inducement. Previous week high target was so clear. It also made sense to go and take the previous week high. So that was also one of my confluences. And one downside was the previous day high. The target for the day was taken very, very early on. So that was one red flag. And also the DXY correlation in lower time frame was good while entering. And now let me show you some things that I've learned from this trade, okay? So what I've learned in this trade was also look at the H4 market structure. As you can clearly see, here, the H4 market structure was clearly higher lows, higher highs, a bunch of accumulation consolidation, and on Friday the market closed at this candle. Monday opened as a bearish pin bar. A lot of sellers entered on Monday, and then literally the market continued to sell off. So also you have to watch the price action and how the candles are closing on the H1 and H4 before taking the trade, so that you get more of the confluence, okay? And whenever there is previous structural liquidity in the trade, it has swept previous structural liquidity, it makes the trade even stronger. And yep, those are the things I learned from this trade. And whenever the weekly bias is not clear, I trade the daily bias. Losses are part of the game, and just manage your risk and follow your trading plan. You will be profitable.